Stock market investing, pros and cons, what no one tells you. What if I told you the same stock market that quietly builds millionaires is also where most beginners lose money? And the worst part? They don't even realize what they're doing wrong. In this video, I'll break down the real pros and cons of investing in stocks. But more importantly, I'll show you the hidden mistake that keeps people stuck for years. Because the stock market isn't risky, you just don't understand it yet. Section 1. What is stock investing really? Before we talk about pros and cons, you need to understand what you're actually doing. Because if you think stocks are just numbers going up and down, you're already behind. When you buy a stock, you're buying a piece of a company, real businesses, real profits, real risk. But here's where things get interesting and also dangerous. Section 2. Pros of stock investing. 1. Long-term wealth building. The stock market has created more millionaires than almost anything else, but not overnight. We're talking years, even decades. Compounding is the real secret, and most people quit before it even starts working. 2. Passive income, dividends. Imagine getting paid just for owning a stock. That's what dividends do. Some companies share profits with investors regularly, but not all stocks pay dividends, and chasing them blindly can backfire. 3. Liquidity, easy to buy and sell. You can enter and exit almost instantly. Unlike real estate, you're not locked in. But that speed, it's also what makes people act impulsively. 4. Accessibility, anyone can start. You don't need to be rich to invest. You can start with very little, but here's the problem. Easy access creates careless investors. 5. Transparency, data and information. You have access to company data, earnings, reports, more information than ever before, but too much information can confuse you more than help you. Section 3. Cons of stock investing. Now let's talk about the part most people ignore. 1. Market volatility. Stocks don't just go up, they crash hard. Even great companies drop 20%, 30%, sometimes more. And that's where most people panic. 2. Emotional decisions, fear and greed control the market, but they also control you. People buy when prices are high and sell when they're low, not because they're dumb, but because they're human. 3. Time and patience required. This is not a get-rich-quick game, and that's why most people fail. They want fast results, but real investing is slow. 4. Risk of loss. Yes, you can lose money, even if you did everything right. Companies fail, markets crash. So how do smart investors deal with this? We'll get there. Section 4. The truth. No one tells you. Remember the mistake from the beginning? Here it is. People treat the stock market like a casino, not a system. The market isn't against you. Your behavior is. People jump in without a plan, without strategy, without discipline, and then blame the market. Section 5. Trading versus investing. Are you investing or gambling? Because most people confuse the two. Trading, short-term, fast decisions, high stress. Investing, long-term strategy, patience. The real winners? They think differently. Section 6. The biggest lie about stocks. Stocks are risky, that's what people say, but the truth, ignorance is risky. The market rewards knowledge and punishes emotion. Section 7. Why most people lose money. Most investors underperform the market, not because the market is hard, but because they are inconsistent. They chase trends, they follow hype, they quit too early. Section 8. The psychology game. The stock market is 80% psychology and 20% strategy. If you can't control your emotions, you can't control your results. Section 9. Risk management. Smart investors don't avoid risk, they manage it. Diversification, position sizing, long-term thinking. That's how you survive and win. Section 10. Diversification. Putting all your money in one stock, that's not investing, that's betting. Spread your risk, because no one can predict everything. Section 11, patience. The market rewards patience, but most people can't wait. They want results now, and that's why they never get them. Section 12, compounding the secret weapon. This is how real wealth is built, not fast, but exponential. Money making money over time, but only if you stay in the game. Section 13, market crashes. Crashes are not the problem. Your reaction is. Smart investors see opportunity. Beginners see fear. Section 14, your strategy. There is no perfect strategy, only the one that works for you. Your goals, your risk tolerance, your timeline. Section 15, the danger of following the crowd. What if the biggest mistake is doing what everyone else is doing? Because in the stock market, the crowd is usually wrong. People buy when it's popular and sell when it's scary. By the time it feels safe, the opportunity is gone. Section 16, FOMO in the stock market. Fear of missing out. It doesn't just exist in crypto, it destroys stock investors too. You see a stock going up and you jump in late, right before it drops. Section 17, market cycles. The stock market moves in cycles, and if you don't understand this, you'll always be one step behind. Bull markets create confidence. Bear markets test discipline. The real winners, they prepare before the cycle changes. Section 18, index funds versus individual stocks. Should you pick stocks or just follow the market? This decision alone can define your results. Index funds, diversification, simplicity. Individual stocks, higher risk, higher potential. Most beginners choose wrong. Section 19, dividend traps. High dividends look attractive, but they can be dangerous. Some companies pay high dividends because they're struggling. Not all income is good income. Section 20, overtrading. More trades don't mean more profits. They usually mean more mistakes. People feel productive, but they're just reacting. Sometimes the best move is doing nothing. Section 21, fees and hidden costs. What if you're losing money without even realizing it? Fees, taxes, spreads, they slowly eat your profits. Small costs, big impact over time. Section 22, analysis paralysis. Too much information can be dangerous because it stops you from acting. Charts, news, opinions. You get stuck thinking instead of investing. Clarity beats complexity. Section 23, fundamental versus technical analysis. There are two ways to analyze stocks, and most people don't understand either. Fundamental, chuck company health. Technical, chuck price behavior. Smart investors don't blindly choose. They understand both. Section 24, time in the market versus timing the market. Everyone wants perfect timing, but almost no one achieves it. The real advantage, staying invested over time. Time in the market beats timing the market. Section 25, panic selling. The market drops and people panic. They sell at the worst possible moment, locking in losses. Fear turns temporary losses into permanent ones. Section 26, thinking like an owner. Stop thinking like a trader. Start thinking like an owner. You're not buying a ticker symbol, you're buying a business, and that changes everything. Section 27, the illusion of control. What if you think you're in control, but you're not? Because the market doesn't care about your predictions. You can analyze everything and still be wrong. Control is an illusion. Smart investors don't try to control the market. They control their behavior. Section 28. Global events, the unpredictable factor. A single news event can move the entire market. Wars, inflation, interest rates, things you can't predict and can't control, and yet they affect your money. This is why flexibility matters more than certainty. Section 29, building a system, not just investing. Successful investors don't rely on luck. They follow a system, a repeatable process, rules, discipline. Without a system, you're just reacting, and reaction is where mistakes happen. Section 30, consistency over intensity. You don't need to invest a lot. You need to invest consistently, small amounts, over time, again and again. Consistency beats intensity, but only if you don't quit. Section 31, the long game, final mindset shift. The stock market is not a sprint, it's a lifetime game, and most people are playing it like a short-term race. That's why they burn out and lose. The real advantage? Thinking long-term, when everyone else is thinking short-term. Now you know the pros and the cons, but here's what really matters. Most people will never succeed in the stock market, not because they can't, but because they won't stay consistent. If you want to learn how to invest the right way, not emotionally, but strategically, subscribe now, because in the next video, I'll show you exactly how beginners should start investing in stocks step by step. And trust me, that's where everything changes.